It's Wednesday, the 11th of September, and it's a very important day for traders today because we have the release of the US CPI, the American inflation number, out today. It's going to be very closely watched because we're expecting a rate cut from the Federal Reserve next week. Will they cut 25 basis points? Will they cut 50 basis points? Perhaps today's number will influence their decision. I'm going to show you what I think could happen to the dollar, gold, and the stock markets on the release of the number today. Now, this is a chart of the dollar index. You can see it's been moving sideways since January 2023. So the dollar really has been going nowhere for quite a significant period of time. We tested this lower trend line recently and we've bounced off it, but there's no particular pattern to indicate where we're going to go next. These moves are random, they're erratic. There is no clear trend pattern. The moving averages are of no use to us whatsoever. They've all flatlined and converged, all trading around the same price. So it really is difficult for me to gauge where the dollar is going to go next. But obviously, if the dollar index does break below this lower trend line, and that could happen, of course, if we get a weaker than expected CPI number today, then that could send the dollar down significantly as the market will be pushing for more aggressive interest rate cuts from the Federal Reserve. If the CPI number, if inflation is higher than expected, then we could expect the dollar to increase in value, of course, because the Federal Reserve could then be expected to make less interest rate cuts this year. That would be frustrating for me because it would mean that we would just remain in this sideways trend and makes it quite untradeable for myself. Today could be a really important day for gold. We could finally get a breakout. We've been trading sideways for a long time. Since April, we had this sideways movement, up, down, going nowhere. August the 16th, we broke higher and I thought, here we go. This is a buy signal. Gold's going to go significantly higher. But all we did was trade sideways in another range. We're trading from 24.75 up to the all-time high of 25.31. We need a breakout of this range for me to be able to find good trade opportunities because, of course, we have no trend pattern, no clear signal at the moment. We're up for a day or two. We're down for a day or two. It's very difficult for me to trade these conditions because I'm not a scalper. I don't sit in front of the screen all day, in, out, in, out. I'm a swing trader. I have a set and forget strategy where I do my analysis in the morning. I enter my trades and I go off for the day. I've got better things to do than sit in front of a screen all day. So we're looking for a weaker than expected CPI number to push above the all-time high at 25.31, which should trigger a buy signal. And I hope a resumption of the longer-term bull trend for gold. Don't forget, gold has been rising since the beginning of the millennium from $666. Now, if we start breaking below 24, that could be a sell signal. It means we're breaking below my Fibonacci level and we're breaking below my trend line here. So that could put us back into this range. US stock markets, EMI, S&P. I think the inflation number is going to be important for the stock markets today. A weaker than expected inflation number should be positive because investors will be looking for the Federal Reserve to aggressively cut interest rates. However, a higher than expected CPI number could send stocks significantly lower because if the Federal Reserve have their hands tied and can't cut interest rates aggressively at a time when it seems obvious that the US economy is slowing in reaction to those higher interest rates, then I think the stock market could go into a mini panic and we could see quite significant moves to the downside. So those are my thoughts on the markets today ahead of a CPI number. Please do let me know what you're thinking about the CPI number.